Hey stackers, if you're watching gold, silver, or metals this week, you need to pay attention to what just unfolded. But first, if you enjoy this content, please hit subscribe and the bell if you want daily clarity on these markets, because today's move tell a real story about market structure, volatility, and where smart money is responding. Guys, today we hit all the way back up into the 80s, which is great going into our bull pennant. It's going to be an awesome, strong momentum swing into Monday. Gold went all the way up to $4,518, which is the highest it's been since it hit its high of $4,584. But guys, this is amazing, being that we just had a commodity index rebalancing. Major indexes like Bloomberg Commodity Index and the S&P GSCI began annual rebalancing around this time. That forces passive funds and ETFs to sell metals that ran the most, especially silver. Estimates show between $5 to $7 billion worth of selling pressure just from the index adjustments. So guys, that's mechanical, not sentiment-based selling, and it hits futures. And hearing that news, and now we see just a day later, that was Thursday, today was Friday, we went all the way back up to $80, is one of the bullish signals I can think of myself. On top of that, margin requirements changed. Future contracts saw adjustments in margin requirements, particularly for silver, that squeezed leverage positions and triggered a wave of forced selling and technical patterns. So guys, that's what we see here. That's what we see here. We saw all these margin hikes, and that's partially what drove a lot of these prices down. But guys, silver just cannot be beaten right now. Every time there's bad news that comes out, boom, we bounce back up. Index gets rebalanced, boom, we bounce back up the next day. And finally, third, profit taking and technical rotations. After silver's huge 140% annual gain last year, traders are booking profits and letting algorithms take some of the heat off the upside. Guys, again, all of that to say we're still ending the week at 70. Well, what are we at? 70, 79 in futures. Our low this week was $73.57. So guys, are you seeing this as a healthy correction, or do you think this is a start of something deeper? Comment below. I want to hear your thoughts. When are we going to break this $82.76 pattern? If we go past it the third time, where's to say we're going to stop? Are we going to wait till we get till the end of this bull pennant to finally break out, or could we see it happen next week? I'm super excited to see. Gold is still fundamentally supported. HSBC just came out with a long-term call. Let me go over to gold real quick. Sorry about that. Came out with a long-term call that gold could reach 5,000 in the first half of 2026, which would be monumental, even while acknowledging volatility and a wide trading range. And remember, 2025 was gold's best year since 1979. That kind of structural strength doesn't just vanish overnight. So guys, heading over to gold, do you think that we could get all the way up to 5,000 by June or July? Personally, I do think it's possible. Now let's go back over to silver. Silver is the main play right now. While gold may be valued more, so we may hit 5,000, I do believe silver is going to have the higher percentage returns this year. It's still facing heavy volatility, but Goldman Sachs analysts pointed out that tight physical inventories, especially in London, and export restrictions out of China can keep prices swinging hard. That's very different from a supply shortage. It's a distribution imbalance, but it has very real price effects. So let's split this into short-term action versus long-term signals. Short-term, mechanical selling from index rebalancing and margin changes is putting pressure on silver more than gold, which is what we kind of see on some of these downswings. Notice how whenever we have a downswing, we hear some type of negative news, whether it's a rebalancing, whether it's a margin hike, whether people are selling off their profits. There's always something negative to what brings that price down. But every time that happens, price goes right back up. So let's look at the long term. Central bank demand, rate expectations, and macro uncertainty still favor precious metals as hedges and wealth preservation plays. So ask yourself, are you trading these swings, or are you stacking through them? Your strategy matters more than today's headline move. If you're finding this breakdown useful, tap that like button, subscribe, and hit the bell so you don't miss tomorrow's update. I break down price movements and the stories behind them. No noise, just clarity. All right, guys. Keep an eye on the next few sessions of the index rebalance, January 9th through the 15th. I know markets are closed Saturday. They open up Sunday night. So be ready for some crazy movements. I think we could break the 82, but then a part of me is like, hey, we got this gap down here that, man, we got to fill, but are we going to fill it? I know it's so minute and it's so small, but are we going to fill this 30-cent gap that we have right here? I don't know, guys. I'm a little hesitant, but I'm a bull myself. I want to see this go to 100. I want to see everybody stack, just continue to double and double. That would be phenomenal. These are expected high volatility this next week expected to be high volatility for both gold and silver, but especially silver because of its weight in commodity benchmarks and tight inventory conditions. So guys, here's today's takeaway. Pullbacks are not breakdowns. They're opportunities when fundamentals still support the trend. So guys, when we do see these pullbacks right here, don't be afraid. That's personally when I'm purchasing more. Whenever I'm looking at my chart and I'm saying, oh, pullback. Okay, I purchased more down here, right? I purchased more right around the 30th. I purchased more on the 2nd, right? And I just purchased more yesterday. And so today, I actually did buy 1 more ounce. There's this local coin shop over in Fort Worth that I like to go to. And so I did buy, 1 ounce, literally an ounce today. And that's part of the importance of this silver stacking, is that you don't always have to go out and buy 5, 10, 20, 50 ounces. Sometimes just being consistent and balancing your cost average basis can be the best part of the stack. So guys, stay disciplined, stay consistent, watch premiums, and don't let short-term noise shake your long-term strategy. I cover precious metals every single day so you can stack smarter and stay ahead of the market. Subscribe to the Daily Stack Report and turn on notifications because tomorrow could be even more interesting.